Man, I mean, gold and silver have been dating a bipolar and having a great Friday night, but then all of a sudden there's too much wine. And that's kind of like what happened with gold and silver prices. Everything was great until dessert came. And we showed you this chart in January last year, or last month, excuse me. And we talked about that we got the anticipated breakout, and I gave everybody levels. I said, okay, on the upside, our first target's 5,000. We reached that, no problem. Second target was 5,300. We reached that. I'll show you another chart. And I was talking about 4,500 as risk management, that if we get below that, the trend is threatened. So we come up to now, so now I've updated the chart to today. You can see after the event. So we did our last event right here, right before that little gap up. And so right after the gap, and I said to everybody, I'll be looking for places to take profits. Things gapped up, and I had a trailing stop on silver that if on Friday it had opened up 1, 2, 3, 4% down, we probably would have started legging out. But it gapped all the way. I mean, before you knew it, it was down 15%. And I don't stop out on those things. I've learned in my career that when there's a panic sell, you don't sell that day. Like, you don't buy something when it's up 15%. You don't sell it when it's down 15%. This was what they call like a 7 sigma, or, something that they do. Like it basically says 7 sigma is basically, holy shit, this has never happened before. All right. So what happened in silver was just a complete rug pull. There's a lot of manipulation that happens in silver prices that you can't do in gold, because gold's a much bigger market. But silver prices, between the cash and the spot price, it gets manipulated. And this was a perfect example of how bankers came in and screwed everybody. But I've learned in this industry, I've learned in this business, that they can do that once, but in a market like silver that is so tightly constrained, back to supply and demand, and the demand was so high. I was looking at the cash markets, I was looking at the spot markets. I was like, I don't think this is going to last. So we gave it some time, and there's been nice recovery since then in gold. And you'll see then the big question is this consolidation after that drop? Is this just going to end up being consolidation before the next rally? That's the way it looks right now, because both gold and silver are trading above their 8-day, their 21-day. They're back above the momentum averages we like to see, and those averages are tilted up. So right now, the evidence has leaned to the side that the correction or the sell-off in gold and silver is over. Okay. But this business is not about like certainties, it's about probabilities. So it looks like it's probably over. However, if it isn't, these are the levels you want to watch. So in gold, we got new upside targets. 5,000, we had been there. 5,300, 5,450 was the old all-time high. If we hurdle that, we start to get into some, just 6,000 is a round number. That would be normal, but probably 6,600, somewhere in that range. Sounds crazy, but, based on Fibonacci levels and yada, 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 it might be one of those areas. From a risk management standpoint, if I saw, a high volume sell off below 5,100, that might prompt me to take some profits, because that shouldn't happen if this is a very bullish move. 4,800 would be the next level I would manage some risk on, by reducing. And then, right now, 4,500 level would be my, okay, I'm out of here. Because, a lot of us are in gold at 1,800, right? So if I'm out at 4,500 after getting in at 1,800, still a hell of a ride. Don't get mad at me. Silver, right now the target's 100. I think we're in the 80s, low 80s. The old all-time high is 120. If we can get over that, then 130 to 150 looks like the easy shot. And then maybe we get up to 200. I'm seeing numbers like 200 to 220 from Fibonacci numbers. That's doable. And then there again, risk management on the downside. a break below 80. We really need to hold 84 to be uber bullish. So below 84, I'd start to manage my risk. Below 76, same thing. And then if we got below 65, that's my get the hell out of Dodge. Time to go focus on something else.
What's your percentage on those targets? Like target 1, 80%, target 2, 60%, like that?
What do you mean? Like the probability of hitting those or the
Yeah.
possibility? I think the probability is hitting the upper targets. I think it's real low. Like the lower targets are possible, but in the
You
current
know what
evidence,
percentage?
yeah, yeah. Like I think it's very low. I think 25%.
For the
I think
200?
yeah, but like hitting 200, I think is like 80%. Like so, I like right, and that I'm biased, right? Like I am biased because I'm in the trade already. Um, but right now, based on what I see in the movement and things, the preponderance of evidence is higher, not lower right now. So if I see that evidence change, well, the first thing that would tell me is breaking below 84. So even though I'm biased, I have very, you know, objective. I don't know, are they objective or subjective? Object. I have very clear lines in the sand that will cause me to, make a move because we're playing with profits. I don't want to give our profits back.
It's a
Hate giving,
casino's money. Come on.
hate giving profits back. I mean, Thursday at the end of January, I went to bed Thursday night, like feeling like a hero. Friday, I just wanted to. Friday, I just wanted to slam my head into any wall I could see. I just was like, Tracy was like, yesterday you were so happy. I was like, shut up, Tracy, don't talk to me. um, so now we're good now. So bottom line on metals is, right now the trends are fed, and eventually we'll see signs of exhaustion. And a lot of times the first sign is volatility. So we've kind of gotten the first shot across the bow here. Watch the miners for early clues because they're giving them right now. If in this recovery, as gold and silver has dropped, if you look at the last, let's call it 7 to 10 days, the miners are actually leading the charge higher. I usually see that in the last phase of gold and silver rallies. So that's encouraging to me because up until the bubble burst at the end of January, the miners were lagging, and I was like, this is weird. So now they're starting to lead, and that makes more sense to me for what I've seen in the past.
Quick
At the end of the
question
day,
that
go
I
ahead.
just thought of.
What's that?
Because the price of gold is $5,500 an ounce, let's say, does that not make it much harder for most people to buy an ounce of gold? So, whereas the miners are a much cheaper per share value to where they might not get as much as an upside, but do you not see kind of a shift of, okay, I can't afford to buy that much gold, so I'm going to shift and buy miners?
Um, well, it's funny because the people who are buying this are not price sensitive. They're not like you and I, where we're buying a Rolex or something, where we're shopping. These are central banks, these are governments, these are municipal. So they're not real price sensitive. They have a goal. They got to get it filled at whatever price. I'm sure there is a price that they say no, we're not going to do that. But in this particular environment, you just got a short squeeze and people tripping over each other. And in these parabolic moves, all the fundamentals, everything just goes out the window, and you got to be willing to sell early.
But even GLD's on, 400, $500, whereas a minor stock is $5. So people
mm-hmm.
that aren't full believers, or don't really know or want to get into the space, I mean, could that have a little bit of a?
Yeah, yeah. Well, two things is people look at the price of GLD or something like that, and they go, "Oh, I'll go buy the miner; it's better." But what at this stage, what happens in the advisor community and in the guys that are recommending stuff to clients is they're now guys like you and I, and it would be transitioning to recommending the miners because it's an easier sell to your client. It's an easier sell storyline to the investor because you say, "Hey, this is a no-brainer." I mean, and you're not supposed to use words like no-brainer when you're talking to your clients, but this is a no-brainer that Last quarter, they had earnings of X, and the price was, 3,000 an ounce. Now it's 5,000 an ounce. Their profits are higher, right? So they have a big increase in their earnings over the next quarters, which should cause the price of the stock being undervalued to catch up. And that's essentially what's happening. Is you're probably got every Raymond James guy, every Merrill Lynch guy. I don't think Merrill Lynch does this anymore because I think they just do bank CDs for people at Bank of America. But you got all the Ray J guys and anybody else that gives active conversations to clients, saying buy the miners rather than gold and silver. So some of that is happening. Yeah.
And because you get an income, if you just buy the metal, you get your just price.
Yeah. Yeah. So you can look at like Freeport McMoran. You can see that's, Freeport McMoran was left for dead for 10 years and now, has gone to the moon. So you're seeing that happen. That's also telling you that this rally is very mature. And if you're new to it, I wouldn't start any large positions, right? And unless you're really good at trading or you're very good at risk management, which most people aren't. This is just not a begin. This is not a place for a beginner to get their feet wet with metals. We've been in this. I'm talking from an angle of we've been in this name. We have profits to play with. And last event, I said, watch the future strength of the dollar for, an early tell. I don't know. I'm not so convinced on that now, but I'm going to keep it out there. I continue to watch the dollar as an early tell, but, it's not helping me right now. So
we got another question.
Go for it.
If you take profits, would you take them from the leveraged ETF first?
Yeah, I mean, that's usually where I start. If I have it in the portfolio, I would sell anything that I would start selling the higher risk stuff, and kind of scale out from there. That's typically what we do. But I wouldn't sell it. In these parabolic moves. It's like the last few hours, like the last couple of days, or where is like so much move that. So timing this stuff is really, really key in babysitting it. And this is a parabolic, and this is why if it's not a parabolic move, you don't have to time it and babysit it, right? You're in there for the long haul. It's just got a nice steady eddy move. But parabolic moves, if you make good money on them, you only make money because you kept it. So you got to be ready to run. It's kind of like the movie. You guys remember the movie Heat? With Val Kilmer and
I was just on it. Just watch that again.
Great movie where yep. Robert De Niro, I think. Oh no, I think it was Robert De Niro looks at Val Kilmer and says, "Hey man, in this life, because they rob banks. In this life, you got to be willing to drop everything at the moment you see heat." And that's kind of how we are with gold and silver. The moment we see some heat around the corner, we're out of here. So